Hey there YouTube. So today I wanted to do a brief tutorial and overview of the IRS Form 2553 election by a small business corporation, or this is otherwise kind of briefly referred to as an S election. So I get a lot of questions about these, and I help clients kind of complete this form and file them based on whether or not it makes sense for them to do so given their business structure, whether it's one owner or multiple owners, what their long-term goals are, things like that. I just wanted to walk through the form, cover all the fields, what you would need to complete or what you can omit, given your circumstances, and overall, why would you want to file this form to begin with? I think that's really important. It's important to understand both the benefits, but also the limitations, right? An S corporation tax structure is not for everyone. It really isn't. There are some drawbacks if you go down the road of filing this election, so I'll touch on some of those. We'll also cover what entities are even eligible to file this form. So there's certain entity types that can and cannot file this form, as well as certain types of structures given, who are the shareholders or owners, how many do you have in there. Those are all limitations that could preclude you from being able to file this election. So we'll cover that a bit. We'll cover the timing on these. I mean, there's a very narrow window when these have to be filed. But if you miss it, it's not the end of the world. There are late election relief procedures, so we'll cover those as well. And then we'll cover kind of how this changes your income tax reporting going forward. If it's an existing entity, right, that you've had under certain types of tax classification for a number of years, and then now you're changing it to an S corp. So I think to start, we'll look at the form instructions, or actually rather, let's talk about the high level benefit for filing this, and you will see this no matter what account you go, they'll almost always pitch this election to you as the way to go. So a common fact pattern is you have an individual that owns an LLC, right? And the LLC is a disregarded entity for federal tax purposes, so all of the LLC's income and expense is reported on the owner's income tax return, their 1040, specifically Schedule C. All of the income, or rather all the profits, are taxed at the owner level, and they're subject to both federal income tax and self-employment tax. So you're really getting hit on basically the self-employment is the payroll tax, the employer and employee portion, and then you're paying federal income tax on top of that. So you're paying a ton of taxes. So the immediate fix is to make an S election for your LLC. Earnings in an S corporation that are passed on to the owner are not subject to self-employment tax, right? So you're immediately lopping off that 15.3% self-employment tax that would otherwise be incurred at the personal level on your Form 1040 when you prepare your return. Now, the catch is, of course, if you're an owner and you're working for the company, the IRS requires that you pay yourself a reasonable salary, which does involve some payroll tax. So that's beyond the scope of this this video. We're just kind of going through the form itself and what you need to do to file it accurately. But that's broadly speaking. So 95% of the circumstances I see, it's someone in that fact pattern, right? They're trying to limit their self-employment tax, so they're going with an S corp. Okay, so let's dive into, who's eligible to even file this. Sorry, excuse me. Okay, so we go in the instructions. Eligible entities. Let's start there. So in order to file the S corp election for an entity, the entity has to be a corporation or an other eligible entity that can elect to be treated as a corp, right, and then subsequently file an S corp election. So if we look at the first piece, is it a domestic corporation? So that's your run-of-the-mill. You set up a Delaware corp, so you've got XYZ Inc., Delaware Corporation. That's a domestic corp. So that entity is eligible to file for the S corporation election. There's other types of corporate structures throughout various states. So some states have what they call PAs, or professional associations. That's a corporate body, generally used for doctors, lawyers, dentists, those types, or engineering firms, things like that. So that entity type can make an S election. You also have PCs, or professional corporations, is the same thing. A professional corporation is a corporate body that can make an S election. So that's the first piece. So 1A, a domestic corp, those are the entities that could make an S election to start. The second piece is a domestic entity eligible to elect to be treated as a corp that timely files this election form. So what's an example of that? So a domestic eligible entity is generally an LLC. So if you've got a U.S. LLC, an LLC is an eligible entity under the regulations. So an LLC, given certain circumstances, can basically elect to be taxed however it wants. There are certain default rules. So if you have a single member LLC, it's disregarded for tax purposes, but it can elect to be treated as a corp or an S corp. If you have an LLC that's got multiple members, it's by default a partnership, but it can elect to be treated as a corporation or an S corporation, assuming it meets the other requirements. And so that's really kind of what we're focusing on here is most of these scenarios are, it's a single owner LLC or perhaps a multi-member LLC, and in an effort to help kind of crack down or reduce their overall self-employment taxes, they're looking to make an S election for the entity at the entity level. So the other big requirements here, just high level, the entity can't have more than 100 shareholders. So like in some LLCs or limited partnership arrangements, you see like an investment fund with a private equity firm or something like that, they might have hundreds of owners in there. And this isn't going to work, right? I mean, an S corp's got to have less than 100, so you can't have these large investment funds with 500 partners making an S corporation election. That's just not going to happen. The other limitation, which is a big one, is the shareholders have to be individuals, so that they're natural persons, or certain types of estates, exempt organizations, or trusts. Most of the time, we're just looking at individuals here, right? So you can't. So if it's an LLC with 3 owners, all 3 owners have got to be just individual persons, natural persons. You can't have a scenario where you have an LLC with 2 persons that are owners, and then let's say the third one is a Delaware limited partnership, or a Wyoming corporation or something like that, because that partner, or rather that owner, would be an ineligible shareholder. It's got to be a natural person, or there's certain circumstances when you can have estates, exempt orgs, or trusts be a shareholder of the S corp. Another big one here is no non-resident shareholders. So there's really, the U.S. is probably one of the easiest places to set up a company in the world. If you're a non-resident, so if you've got, let's say, example, someone living in France that's a French citizen, they can go to the Wyoming business website and launch a Wyoming LLC within 20 minutes. It costs $100. You pay $50 registered agent fee, and you're done. No restriction whatsoever on that. The one restriction, though, is certain types of tax elections. So if that individual wanted to say, I want to make an S election for my LLC, can't happen because they're a non-resident alien. They're not an eligible shareholder, so they're not going to be able to do that. The other big limitation, and this is why, so if you talk to a knowledgeable tax practitioner in this space, this is the sticking point. The one class of stock issue is probably one of the bigger problems or limitations with an S corp. So what that means is the company can only have one class of stock. So every owner in the entity, if you have a multi-member LLC, for example, they are splitting all items of income, expense, distributions. Everything has to be allocated in proportion to their respective stockholder ownership interests. So if you've got 3 owners and it's 30, 30, and then 40, everything's got to be split according to those percentages. You can't specially allocate certain types of income or cash distributions that are disproportionate to their ownership percentage. And in a lot of cases, that's a real issue. A lot of LLCs and other partnerships are structured where they have investors come in that perhaps aren't going to, participate actively in the company, so they have different allocation schemes, and that's all fine under the partnership regs. You generally can do that, but that's just not possible in an S corp structure because there's this limitation on just one class of stock. So that in my experience is the biggest issue. Is if you have a multi-member LLC or a corporation with multiple classes of stock already, right? That's incredibly common. You have common and preferred stock. You have Class A, B, C, D, and so on. If you have any arrangement like that, you're not going to satisfy this requirement that you only have one class of stock. So this just won't work. Okay. So that's high-level requirements. And item 6 here has a bunch of other kind of limitations. You can't have an insurance company in the U.S. that's an S corp. But we're just hitting the the 98% of cases that generally file this form and are looking to qualify. So we'll kick it over to just an example. So I have here an example of the form. I guess we'll start with page 1, just the mailing instructions. So it's pretty straightforward. Obviously, look, wherever your business is located, this is the address you're filing with. You can't submit it by fax. I would say, let's see. So this is a little unique because the other entity classification forms that we see often, the 8832, to elect to be treated as a corp or other entity. That's different from its default classification. Those can't be submitted by fax. So I'm not sure why the IRS is accepting these election forms via fax and they're not the others. But as a best practice, I always recommend just printing and signing and then mailing it, because sometimes they can be real sticklers for, they want to see that somebody actually had an original signature on the form. So they don't like e-signatures or, like typed in signatures like a PDF, the typewriter font. They, sometimes they look at that and think that it's fraudulent. So I don't know how you can tell that via fax, but whatever. So yeah, my advice is always just to print, do an actual manual signature, ink pen on paper, and mail that to the appropriate address here, wherever your business is located. Okay. So let's get into the form itself. So the first section, this is a lot of this is pretty self-explanatory. Obviously, you need the name of your entity, the mailing address, an EIN is a must-have. You cannot file this with just the entity name. They won't process it. If you don't have the EIN in here, they will just mail it back to you. So make sure you have your EIN assigned to the entity. And the entity, and enter it here in field A. Date incorporated. This is obviously the date the entity was formed. And incorporated LLCs technically aren't incorporated because they're not corporations. They're organized under state statute, but just ignore that word. I mean, if it's an LLC, just enter the date the entity was formed. Right? That's fine. And the same thing goes here for the state of incorporation, just whatever state it was legally set up in. If you're formed in one state and you're registered to do business in a bunch of other states, right? So if you're a foreign entity registered to do business in multiple states because you have employees or operations elsewhere, just go with the state that you were initially set up in. So go with the state that you're considered a domestic entity. Okay, so part 1, item E here, election to be effective for tax year beginning what, right? So for a newly formed entity, this should be the same date, right? I mean, if we just set up an entity and we knew from the get-go that we wanted to be an S corp, you would just enter the same date because you don't want any gaps in entity classification, right? So like, for example, so if you set this entity up April 1, let's say I own this 100% of this, so it's a DRE at this point. If I launch it April 1 and then I put in here, let's say June 30, the IRS might process that as June 30 as the start date for the S corp, which is fine. But the issue that creates for me is now I was a single member LLC from April 1 to June 30. So when I do my taxes, I've got to still complete a Schedule C for this disregarded entity for that short period, right? So I've got a Schedule C for Jason Not Florida LLC for a couple of months. And then I prepare a completely separate Form 1120-S tax return for this S corporation effective June 30. Obviously, I guess there's nothing really wrong with that, but it's just a little cumbersome and kind of sloppy. So obviously, in cases where you have a newly formed entity, just try to get the dates the same, right? So you've got a very clean, start date for when the entity was set up and when the S election is effective. Item F here, selected tax year. Generally, this is always the calendar year. Because these are individual taxpayers, natural persons that are most of the time owners in these companies, in an S corp, the IRS wants the tax year of the entity to match the tax year of the ultimate owners, so calendar year. In limited circumstances, you could use a fiscal year. That's often, you see a lot of June 30 year ends in some cases, certainly like professional service companies, like public accounting is very popular for fiscal year ending because a lot of public accounting firms are on June 30 year ends because they have very busy, their busy season is Jan, Feb, March, and April. Right, so for them, it just makes sense to have that fiscal year end post busy season. So when the year comes around, they've got a better complete kind of operating year that matches their fiscal year or for tax purposes. Same kind of thing with, I guess, retailers are kind of in this same boat, right? A lot of retailers don't use December 31 year ends. They use Jan 31, and they do that because they want to have fully captured the Christmas rush for sales and then some returns and other allowances that might come in early in January. So they'll use a Jan 31 or a end of February year end. But for most of the time, absent some unique circumstance that you're already kind of planning for, just go with calendar year. Item H here, name of officer, legal rep that they can contact with, if the IRS needs more information. Generally they don't. I mean, as long as you complete this accurately and you complete all the fields, they're not going to reach out to you if they need more information. So item I, this section is if the late filing procedures need to kick in here. So this form, similar to the 8832, it has to be filed within 75 days of the desired effective start date for the S election. So if we go back up here, if April 1 is the date we want it to be effective, we would have to file this, so it's got to be postmarked within 75 days of this date. If it's beyond that date, then this is technically late. So if it's late, you can still enter April 1, 2020, and then you can complete this reasonable cause statement pursuant to Rev Proc 2013-30. We'll get into that a little bit, but 2013-30, the revenue procedure outlines late election relief procedures for S corporations. And so you would lay out, the elements of the Rev Proc and why you have reasonable cause for your failure to timely file. And, if the IRS is satisfied with your explanation, they'll still grant you this April 1 start date, even though you file beyond the 75 days. Okay. So let's jump down to part 1 for the shareholders. So for the S corp election, you've got to lay out all the shareholders that are going to be part of the company. So if you've got, like in this example, you've got I'm the sole owner, so I'm a 100% owner. It's currently a single member LLC, so I'm going to be the one owner here, name and address. Not a real address, by the way, but oh, maybe it is. I don't know. I haven't Googled it, but then you can do, fill out all these other elements here. So number of shares or percentage of ownership, date acquired, just same date that the entity was set up, right? That makes sense. The social security number of each shareholder. This is really important to have this in there, and then the shareholder's tax year end. So I'm a natural person, right? All U.S. citizens. Natural persons or residents, their tax year is just 12/31, right? December 31 calendar year. And so when you print this, this has got to be signed in a couple places. So up front here, we've got a signature of the officer for the overall election, and then down here, every shareholder has got to sign this, sign and date. Okay, so part 2. So this goes back to the fiscal year discussion. Again, you can leave this completely blank if you're just using a calendar year. But if you are going to use a fiscal year, you need to complete part 2. Okay. Part 3 is qualified subchapter S trusts. So back to the eligible shareholder discussion. Most of the time, S corps are owned by natural persons, but there are instances where certain types of trusts can own stock in an S corp, and it wouldn't invalidate the S corp, and so that's where you would complete these fields here. So if you've got a trust, if you've got some sort of grantor trust or revocable trust or something, and an eligible beneficiary, that's the other issue. It's got to be an eligible beneficiary. You would enter the trust name and address, the EIN for the trust, and then the beneficiary's name, address, and their social security number. Okay, and so part 4, these are the assertions you're making. If you file pursuant to late election relief up here, right, the signature page, the signature block, and this section. If you're filing under the late election relief procedures, you're basically attesting to all of these elements are present and they're satisfied, right? So this is an eligible entity under the regulations. Requesting entity fails to qualify solely because it was not timely filed, right? So that's, you're letting them know that, look, I've met all the other elements, right? I've got all eligible shareholders. We're under the 100 shareholder limit. We're only doing one class of stock. The only reason I just haven't had this S corp approved is because I filed the document late, right? Okay, so let's touch on the late election relief procedures a little bit. Let's see if they don't list it down there, but they have it up at the heading here. Okay, so at the top here, election by small business corp, including late election relief pursuant to Rev Proc 2013-30. So if you are filing pursuant to late election, you generally, so you have to outline the 4 elements under the Rev Proc which show that you qualify, and you're supposed to write on the top here, file pursuant to Rev Proc 2013-30, just to kind of give them that heads up that, hey, look, this is going to be late, and so I'm filing under this Rev Proc and I've completed this section down here. So Rev Proc 2013-30, it's very similar to the Rev Proc used on the 8832 to request late election relief. The 4 big elements are, the taxpayer is intending or did intend to be classified as an S corp as of that effective date. They're requesting relief pursuant to this Rev Proc within 3 years and 75 days after the effective date. The failure to qualify was solely because this is just being late, right? I mean, we don't have any ineligible shareholders. We don't have we have only the one class of stock. We've done everything right. It's just we missed the deadline for filing this. And then the 4th element is just reasonable cause. You got to show some sort of reasonable cause. Say up here, I declare also reasonable cause for not filing the entity classification election timely, and the representations listed in Part 4 are true, right? So reasonable cause is a pretty low standard. It's not as low as non-willful, or you see that in FBAR penalty cases, but it's a separate issue. So reasonable cause. A lot of it is just, you could tell them, well, I set up the entity and I thought that this had to be filed. I thought this could be filed concurrently with the first year's return. That often works. Just say, look, I didn't know. I thought I could make the election with the tax return. Another one is, frankly, you throw your lawyer or your accountant under the bus and you just say, look, I consulted with someone on this and they helped me set up the entity and they just didn't let me know about these deadlines at all. And that does work. I mean, reasonable reliance on a qualified tax professional will give rise to reasonable cause, right? So if you did reasonably rely upon a tax professional to your detriment and they kind of messed up, you can lay that out in your fact pattern statement, and the IRS generally will grant you some leniency and they'll prove it. For the most part, a lot of these are almost automatic, even the late filed ones. As long as you're filing it within kind of a year and you haven't had to file the first tax return yet. So if we go back to this example, like April 1, so if I was filing, so I had to file within 75 days of April 1, I'd missed it. So if it's September or October of the same year, I can file this and I can say, well, I've only missed it a couple months, and when the year closes, December 31, the calendar year closes, and in January and February, I'll file my first 1120S under the pretense that this is going to be accepted. And they generally are okay with that because you haven't gotten yet to the first deadline for the first tax return. So in this fact pattern, as long as you filed a late election before the close of the tax year, you should be okay. So you file that election before December 31, 2020. It takes 6 to 8 weeks to process the election. So the S corp returns are going to be due March 15th. So you could probably get it done then. If not, you can file an extension request. You can file an extension request even if the election has not been approved just yet. What you would do is on the 7004 extension form, you would enter the LLC name and EIN. That's going to be an S corp return, and if you mark initial on the 7004 form, if you mark initial, it'll push any extension through because they're basically getting ready for you to file an entity classification request for that EIN. In effect, it's a bit odd how it works, but in my experience, as long as you mark initial and then short period return for a new entity, you can push through an extension for almost anything, and that's really good because what you want is an extension under this EIN. And so if it takes a little longer to get the S corp election confirmation, at least you have the extension on file in the e-file system, right? And then if you need a couple more months to get the return file, that's fine. You should be okay. So one of the other big benefits. So we talked about this S corp. The self-employment tax savings, and that is a huge plus. One of the other big ones, particularly for single-member LLCs, is the W-9. So let me go to the W-9 really quick here, just to illustrate this point. So when you have a single-member LLC that's owned by an individual, it's a disregarded entity for U.S. tax purposes by default. So if you're operating your business and someone asks you to complete a W-9, the way you would complete it is you would put your name at the top here, right? So your individual name goes at the top here in line 1, and then the LLC name down here in line 2. And you do that because it's a disregarded entity. So in item 3, you would check individual, sole proprietor, or single member LLC, and then you would have to enter your social security number, right? That's per the form instructions. Now, obviously, that's not ideal. Nobody wants to be handing out their social security number to all these individuals or businesses that need a W-9. It's your social security number, right? I mean, identity theft is rampant, so the less you have to hand that out, the better. The nice thing with the S corp election is it eliminates you having to do that. right? Once you make an S corp election, the LLC is no longer disregarded; it's a regarded entity. So you would enter your LLC name at the top here in line 1. Business name you would just leave blank because you have your LLC up at the top. In item 3, now you would check here, limited liability company, and then enter tax classification. Am I C, S, or P? So P for partnership. You're an S corp, right? I filed it 2553, so I'm an S corp now. So enter the S, and then enter your address information, and then leave Social Security number blank, and enter your LLC's EIN. That is, that's obviously much more comfortable to business owners to just be giving out, their business information rather than have to stick their personal name or their personal Social Security number, on this W-9 form. So that's another huge benefit to having the S corp, particularly in a disregarded single-member LLC scenario. Okay, so I think it covers all the form elements. I'll have a separate video that goes into more depth on some of the drawbacks from having the S corp. That there are cases where it really just doesn't work, where the self-employment tax savings, put it this way, do not outweigh the limitations of the S corp election. So I'll do a separate video on that. But so I hope you guys enjoyed this video. I hope it was informative. Please, send me an email if you have any other questions. Leave a comment on the video. Happy to respond that way. And thank you guys for tuning in, and I hope to see you again. Take care.